Join us to get exclusive and rare access to some of the industry's best leaders. Leaders who will share all their secrets to success with you. Leaders who have closed thousands of successful deals between them, generating hundreds of billions of dollars. Leaders giving you the roadmap to fast track your career and reach the highest echelons of the business. So welcome to Series 2 of the Investment Banking Leaders Podcast, and best of luck on your growth journey. Hi, I'm Pete Nieberg, the host of the Investment Banking Leaders Podcast and the Global Head at Outram. And before this episode starts, I have a small favour to ask of you. We had just over 20% of listeners subscribe, and our goal in Series 2 is to increase that to 40%. So if you've ever liked any of our episodes or our content, please hit subscribe. It helps the channel more than you can ever know. And the bigger this channel gets, the higher profile leaders that we can collaborate with to help you on your journey. So thanks for your support in this area. We also appreciate how busy you are, and we've added timestamps to all of our video content in Series 2, making it really easy for you to access the topics of most interest. So I hope that helps, and enjoy the episode. I'm excited to introduce today's guest to you all, Steve Hufford, Senior MD and COO at Raymond James in the US. Steve's journey and career is not linear or your typical investment banking route, which is why I'm really excited to have him on the show today. For a little bit of background, Steve has been in the capacity of COO since 2017, where he manages business units, coaches, leads and mentors the senior team, as well as creates development programs such as Banker U, which is a hard and soft skills development program that covers all roles on the IB totem pole. He's part of the senior team that leads Raymond James acquisition efforts, as well as many other strategic initiatives. So Steve's helped companies in the fintech, payment sectors raise capital, acquire businesses, and achieve attractive exits through sales, recaps, and public offerings. He's got a wide range of financial knowledge. He's also got a deep understanding of fintech, robust industry contacts, and his hands-on deal making have guided his team to complete over 100 transactions since 2010. And not only that, but the transactions led by Steve have received several industry accolades, including the FinTech and Services Deal of the Year from the M&A Atlas Awards and the Restructuring Deal of the Year from the M&A Advisor. It's definitely fair to say he knows a bit about successful deal making. Prior to investment banking, Steve founded, built and grew different businesses in the law and technology spaces, bringing an entrepreneurial spirit, making him a special guest for us today. And as an interesting side note, in his spare time, he also serves as a high school basketball coach in the community, which I'm sure we'll touch on later given his passion. So given his varied background, wide range of skills, expertise and experience, as I mentioned at the start, I'm psyched to hear his insights to help you all grow and develop today. So welcome to the Investment Banking Leaders Podcast, Steve, and thanks for joining us.
Pete, thank you. I'm really glad to be here. I'm looking forward to it.
Excellent. So let's just start with you introducing Raymond James and what you do for your clients to our listeners.
Sure. Some listeners are probably familiar with Raymond James. It's one of the largest wealth management businesses in North America, although we also do wealth management now in the UK and across other jurisdictions across the world as well. At the global level, it's a $12 billion revenue business, $23 billion market cap. So it's a very large business, Fortune 500 business. I work within a division of Raymond James that we call Global Equities and Investment Banking. It's our corporate or institutional investment banking practice. I serve as the COO of that practice. That practice is a pretty straightforward middle market investment banking practice. We've got roughly 625 bankers in, I'm going to say, roughly 25 offices across the United States, Canada, Europe. We focus on transactions that support companies with enterprise values of, let's say, maybe $100 million at the low end to $4 to $5 billion on the high end. About 80% of our revenue comes from mergers and acquisitions activity. So while we do some equity capital markets, we have some ECM bankers, and we have some sectors that we support a lot of equity capital markets business in, particularly our real estate group is successful there. The bread and butter for us of everyday revenue generation is mergers and acquisitions, and that's where we spend a lot of time training and developing our bankers to be transaction ninjas from an M&A or ECM perspective. So that's a kind of a rough outline of our business.
Love it. Thanks for sharing. I think that definitely helps. I'm sure many of the audience will know at least a bit about Raymond James, but thanks for the extra colour. As I mentioned, before we get into the meat of today's discussion, you've had a unique path building different businesses before joining investment banking. So first of all, how did you end up in investment banking? And the second part to this is, how did spending time building your career outside of investment banking really prepare you for the role you're in today?
Great. Thank you for that question, Pete. I think it's an interesting one. The short answer to how I got into investment banking management in a single word would probably be circuitously. I did not take a straight line path here. I started my career as a mergers and acquisitions lawyer in private law firms, and I worked in that capacity for roughly 13 years. At the end of my career there, I was a partner running an M&A practice, did some public securities work as well, but primarily an M&A practice in and around the technology field, and running small teams, leading deal teams, getting a good basic experience with small team leadership, which is such an important part of conducting a successful investment banking practice. I was enticed out of that to become a corporate development officer at a local public company in Atlanta that was doing a lot of M&A in the telecom arena back in the mid to late 90s, let's say. And so I jumped into that. That was an interesting excursion for me because as a lawyer, your clients typically hand you a structure of a deal or an outline of deal, and your job is to document it from there and negotiate it to fruition. As the M&A representative of a small public company, you actually have a blank sheet of paper in front of you when you go into that room. So you're creating the deal from scratch as opposed to documenting it. So different kind of skill set associated with that. I was recruited out of that to join a colleague, actually somebody whose company we had acquired. He had some new business ideas. This is now late 90s, around internet content and an area that became financial technology. And I joined him, and over about an 8-year period, he and I built and sold a couple of different companies that I got to try a bunch of different skill sets associated with that. I helped raise capital for our businesses, so articulating the value proposition to outside investors. I worked pretty closely with the board. Having recruited those investors in, I worked pretty closely with the board. I wound up in a couple of those businesses essentially serving as the leader of the sales team, helping to build the value propositions for clients. Our clients were typically large financial institutions, so we were a small company selling to big FIs, which at that point gives you some skills doing negotiation in kind of asymmetrical power situations. Interesting. We sold both of those businesses. We sold one of them rather quickly after a couple of years. The second one that we started took us 6 or 7 years to get exited from. So I had a long career as a co-entrepreneur, learning how to create and drive small businesses. I left the second of those businesses. Now we're in the 2006, 2007 kind of time frame. I had a year of providing some consulting direction to the company that bought our company. And then I was approached by Raymond James to build a financial technology investment banking practice out of Atlanta, which is where I'm resident. And took that job, thought it was a pretty exciting opportunity. I'd spent much of my career in and around investment banking without actually having done it myself. I joined Raymond James, had some good fortune in that we made an acquisition of another firm that had a great fintech practice, and I got partnered up with a gentleman by the name of Jim Bunn, who's my boss today. Jim and I have been partners now together for roughly 15 years. We built a very nice financial technology focused investment banking practice together. And we did that through the mid kind of teens. Jim went off to run the global equities and investment banking practice at Raymond James. And then in 2017 asked me to join him in the management of the investment banking division of RJ, which is when I became the COO. So that's the path. The tying element to it is that there's been a substantial kind of thread of mergers and acquisitions running through all of that. So I've seen M&A from the agent's perspective, from the investor's perspective, from the company builder perspective. So I've had a lot of different angles on M&A that helps me to think about that effectively today. And then the other piece of it is that I've had a great deal of, I'll say, small team leadership. I've managed a lot of different personalities, and that probably as much as anything is what prepares me to take the role that I have today, which is all about forming and leading teams and bringing folks together to accomplish specific missions that we have out of the investment banking department. So that's the background. It's pretty varied, and as I say, for a lot of investment bankers who leave undergrad or leave business school and wind up doing it from that point forward for 20, 25, 30 years, my path is very different to how I got here from a path like that.
Yeah, it's a really interesting journey. So thanks for sharing it. And I've spoken to many leaders, and your journey is certainly one of the most unique. And it's great. It shines through the variety of skills, seeing it 360 of M&A, if you like, from all the different vantage points, and learning those skills about how to build teams successfully obviously is keys to your success. So I'm sure we'll unpack those in a bit more detail later. I want to jump into deal making. Having closed hundreds of deals in your career and seeing the full circle of the deals, as well as winning awards for them, what are the keys to getting deals done in an IB context?
Yeah, I love that question because it's a question, Pete, that we spend a lot of time on at RJ in an educational setting that we call Banker U, which I'm guessing you and I may talk about a little bit later. And my partner, Jim Bunn, whom I mentioned earlier a few years ago, made 10 rules of investment banking for having investment banking success. And so I'm going to reference a few of Jim's rules now in terms of how to be successful in an IB career. I'm not going to hit all of them, but I'll hit about half of them. Jim's first rule is to make calls, to be relentless. And by that, we're talking about calling on prospective clients. You just have to have a calling orientation, a plan, and you just have to get after it and make those calls. Secondly, Jim counsels bankers to listen well and be attentive. I think that's a great skill in almost any career path, but learning how to really digest what your client is saying and understand it before you respond, as opposed to thinking of your response while he or she is telling you about the problem. You really have to listen, be attentive, and understand the problem from the outset. The third rule that we have for our bankers is to be responsive. And by be responsive, we mean things like when you get an email, don't let it languish for 24 hours before you respond. If you're on a trip or you're in a deal or you're on a flight and you can't respond, at a minimum, you can probably respond enough to say, hey, thank you, Pete. I have your email. It's going to take me a couple of hours to get to it, or it might take me 24 hours to get to it, but I recognize I've got it and I'll be back to you shortly. That's the notion of responsiveness. So if you can't in the moment respond substantively, at least you can give the person reaching out to you a sense of when you can get back to them. And that idea of being hyper responsive, I think people really love that from their bankers. They feel like their bankers are really on top of it if they're doing that. Probably you ask really about how to get deals done. This next one, which is Jim's rule number 6, is one of the most important ones, maybe the most important ones of the group, and that is be persistent, be tenacious, and find solutions to problems. Clients expect bankers to solve problems, not tell them what the problems are. And so we really have to be creative around, okay, what is the problem and what are some really creative ways to work around it? And a lot of times that takes 3 or 4 iterations of thinking, maybe some quiet time, but you can't give up on a transaction. You got to pursue it relentlessly to the end. So that idea of being persistent, tenacious, gritty, and solution-oriented, I think, is probably the most valuable of all of the rules. I'll hit a couple more that we talk about a lot. The next one is stay on the high road. By stay on the high road, we mean, look, don't demean your competitors, don't demean your team members. Stay positive. Talk about what is working. If you have to talk about what's not working, figure out a constructive way to communicate it, and then talk about how you're going to, again, back to the earlier one, how you're going to solve that problem, how you're going to stay on that high road. And then the last thing I'll say is be organized and consistent. Organized meaning you've got a system for knowing what it is you're committed to doing to get a certain transaction done. And consistent is doing what you'll say you'll do. In other words, if you say, yes, I've got it, I'll call that client tomorrow and I'll get some additional diligence information for the team on that matter, then write it down so that it's organized, and then do it so that you're consistent in the execution of what you volunteer to do. It really falls in the category of make good on your own commitments, right? If you make a commitment, we expect you to follow through on it and complete it. Or if you can't, then to come back to us and say, hey, I made this commitment, not able to fulfill it for this XYZ reason. I'm going to make a different commitment or recommit on it, and then I'll come back to you. But be consistent in that way.
Amazing. Thanks so much. Really clear, and what a great list of examples, I think, for those listening today who are looking to have success in their career, more importantly, be successful deal makers and support a successful deal process. These are great. Making calls and relentless. I think some of that's maybe been lost, dare I say it, in the COVID era, and maybe there's less desire to get out there and maybe prospect as much as before, but it's so key when you do. I love it.
You said something that triggered in my mind. So I flew to New York, where I am today, for this discussion from Atlanta, and I happened to be sitting next to the managing partner of McKinsey's Atlanta office on the flight, delightful woman named Tiffany Burns. And Tiffany and I had one of those airplane conversations that seems to go on for 2 hours. And one of the things she was saying was what you said, which was, in the post-COVID era, it seems like we've all gotten a little bit relaxed, maybe too relaxed, about getting out in front of clients and calling on them, and the importance of doing that. I think that in an investment banking context or a consulting context, high-touch professional context, there is a bit of an expectation from the client that you're going to show up and see them face-to-face. And as you and I both know, so much is lost when you get away from the face-to-face context. It's an important reminder that it is still that personal touch business, and we have to lock into that and get on the airplane and go do it from time to time.
I agree. And in some areas, it's a competitive advantage now because people have changed and they're not doing it as much as they should be. So what yourself and Tiffany say really resonates with me. Let's talk a bit about growth and development. Obviously, Banker U, you're heavily involved in that, and you're passionate about growing and developing teams. So let's start off with those analysts and associates. Obviously, the commandments, this list you've given me is a great start point. But for those analysts and associates who really aspire to progress into the higher roles, the senior roles, the MD roles, what advice do you have for them?
It's a great question. I think I'd give them a couple of pieces of advice. One is to treat those first, say, 2 to 5 years. You can decide what your time frame feels, but treat those first 2 to 5 years as a real apprenticeship. Many of our bankers at that age and stage of life are still single. They've got relatively few outside commitments. You can really lock yourself into the long hours that the industry requires. And I suggest that they not do it begrudgingly, but they rather look at it as an investment in themselves. That commitment of hours is really an investment in themselves. And take that apprenticeship seriously. Again, back to the post-COVID thing, going into the office so that you can sit shoulder to shoulder with the VP who's working on your deal and look at a model together. Those are priceless moments in the growth and evolution of a young banker. So I really encourage young people to realize that it's a tough business. It's a long hour business, particularly in those early years. And don't begrudge it, but welcome it and invest in yourself. See it as an investment in yourself to get there. I'd probably also emphasize, back to the rules we talked about a few minutes ago, developing that persistence and tenaciousness. We talk a lot in Banker U. We can come back to what Banker U is, but we talk a lot about the attribute of grit. Being gritty, that investment banking requires a certain level of grittiness to just fight through the obstacles of a situation, a deal, whatever those obstacles may be, having the relentlessness to fight through that and get things done and be creative about thinking how to do that. So that's really important. I think most banker training programs at most firms have hard skills training, meaning how to run a model, how to run an LBO model, how to determine the cost of capital, how to run a closing sheet, all of that stuff. Young bankers are going to get those skills. I think what I would say is I'd encourage young bankers to be super observant of the senior bankers around them, because that's how they learn a lot of the soft skills. So by soft skills, things like how do they talk about their clients? How do they get people excited about the client's story? How do they negotiate? How do they lead into a negotiation? How do they build to a point? Here's a big one. When we talk about senior bankers, we talk about the ability of a senior banker to, quote, own the room. And what we mean by that is that when you get in a pitch context as a senior banker, can you establish yourself as the transaction expert for this deal? Can you get to the point where everybody in that room looks to you and says, I don't know, Pete, what do you think we should do? That's owning the room. And owning the room is a skill. It's all about presence and developing that presence and having that effect on people. And a lot of senior bankers who are really good at it, they don't know how they did it. They don't know how they got there. They just happen to have that skill. But junior bankers can sit and be observant as to how does XYZ banker continue to position herself to be that authoritative voice in the room. What are they doing? What are the small things that they do? And then you can emulate that. And being observant, you can also be observant about things that don't work. What is it about that particular senior banker that diminishes his or her authority in the context of a transaction that they probably shouldn't do? It could be someone on your side of the deal, or it could be someone on another side of the deal. But that idea of using it as an apprenticeship, being super observant of all the things that are going on around you, and then spending time to incorporate all of that into your own skill set so that you're learning not just the hard skills that you're getting trained on in a formal sense, but you're developing these soft skills as well. That's what I think ultimately makes for a well-rounded banker 5 or 6 years into a career, somebody that we then begin to look at and say, yeah, we can envision this person being a managing director someday in the not too distant future.
I love that. And I hear it a lot about being a sponge. You got access to
Being
great leaders within the business, but great leaders on the deals that you're doing to. So that apprenticeship that you mentioned, being observant, soaking it up is so key. And being in the office, right, is so helpful for that. So again, that I can relate to that. And for those maybe in the more junior roles that maybe are a bit shy or caught up in their day-to-day, advice for them to really put themselves in more positions to connect with leaders or to stand out or to build mentors? Anything in that area you could share with us?
Yeah, that's a neat question. I'd say a couple things. One is we've already hit on this a couple of times, it's just be in the office, right? Because bouncing into people and rubbing shoulders and meeting them in the coffee room and having an opportunity for that senior banker to say, hey, would you come in my office? I've got an interesting call with a counterparty at 9 o'clock. Maybe you just want to sit on the other side of my desk and listen. That gives you opportunities that you wouldn't otherwise get. I'd say for those who are maybe a bit introverted, I'd say force yourself out of your comfort zone there. It is a full contact sport in some ways, and I'd encourage them to lean out and ask senior bankers if they'd be willing to take them to lunch, let them join a call, whatever it may be. Look for those opportunities to interact with them and be outward about it. In terms of finding mentors, which I think is a great question, mentoring is something that we believe is very important at Raymond James. We talk about creating a culture of mentorship where senior bankers are just naturally helping out down the totem pole, and that even junior bankers are looking to more junior bankers to provide mentoring capabilities to them. I think the thing that I would say there is that I would encourage listeners, your young listeners, Pete, not to be super overt about the mentoring request. In other words, walking into someone's office and saying, will you be a mentor to me, creates a lot of pressure on that relationship, creates a lot of pressure for that more senior banker to do something that he or she may not be naturally comfortable doing. On the other hand, walking into that office and saying, hey, I was in that meeting the other day, I was observing you, and I saw that you do this really well. Would you mind going to coffee with me one day, maybe next week, and tell me how you learned and developed that skill? In other words, mentoring best develops in a really natural way where the person looking to be mentored has a genuine interest in something that the mentor does well, and asking people things like, how did you learn that skill? How did you develop that skill? Or do you even realize you have that skill? Is that natural? Is that learned? Asking those types of questions will very naturally lead people to want to give you an answer. And then as that back and forth begins to occur, you find in a good mentoring relationship that the senior person winds up investing in the junior person, which is really what that mentoring relationship is all about at the end of the day.
I love that. And I'm in agreement with you. The more organic, the better. And by being present, getting out of your comfort zone. And it's strange because the barrier I hear from maybe the more juniors in the industry, like asking those questions, putting it to a senior investment banker like you have, hey, I noticed this or I noticed that, or would you mind, seems to be a big thing. But actually, when you speak to a lot of leaders such as yourself, they're very open to it, and they're open to having those conversations, actually enjoy it, especially if it's, like you say, around the strength. Good advice there, and hopefully the listeners will take that up. And if you haven't got the confidence yet, you'll pick up a bit more to go and speak to your seniors and put yourself out there a bit more, because it will certainly help you grow your career.
One thing there, Pete, real quick, not to go on about this point, but we're all humans and we all like to talk about ourselves, right? A question about how'd you get good at that, or did you know you're good at that? The senior people will respond to that. You don't have to envision that you're going out on some big long ledge to ask that question. That's something that most people are going to be responsive to.
No, definitely. And in your position, you've been managing and mentoring senior leaders. We do have VPs listening who want to be those senior leaders, and even some senior leaders listening who want to know what others are doing well. So could you share a bit about what you've learned from mentoring and managing those senior leaders, what people could take away to be better leaders?
Sure. I'm going to start by saying I want to be careful about communicating that I'm mentoring senior leaders, because in a lot of ways I think of myself as having peer relationships with my senior leaders where hopefully I'm contributing to their development and they're contributing to mine in kind of an organic sense. And I say that in part because I think a lot of senior leaders don't really want to be mentored. They've developed to a certain place. I will say I love our senior bankers and I love dealing with our senior bankers because, frankly, I think we have some of the most talented people in the industry working on our platform. And so you're talking about people who are very smart, very committed to investment banking success. Most of them know extraordinary amounts of information about the sector that they play in. They're incredibly well connected. They have this natural drive. They've got that relentlessness that we've talked about earlier, and they're really good at getting deals done. So you're talking about super creative, impactful people, and a lot of times they really give me a lot of energy in those conversations. I walk away from those conversations being pumped up about what they're going to go do. I had one of them say to me recently, Steve, what are you going to do in 24 to move the needle? And I felt like, man, I got to come up with a plan here. I'm getting challenged by my own guys. And I love the energy that I derive from those conversations with our senior guys. Now, guys and women, by the way. Guys is an all-encompassing generic term, I should say. I don't necessarily just mean men, because we have a number of great senior women bankers as well. One thing I would say is that we're all humans, so while our senior banker crew may be incredibly talented and generally is, most of them have something that they could be working on. So I'll just give you an example. We have some great bankers who maybe are less organized in their calling efforts than they should be, right? They've got a calling plan, but it becomes a bit episodic over time because they're drawn in so many directions. For example, I'll look for what is it about this individual's practice where I could contribute something to him or to her that would make a better banker out of them, okay? And so sometimes it'll be, hey, have you ever thought about being a little bit more consistent in the way you build a calling plan? And I've got some examples from some of our really organized bankers that I can share with them and say, hey, did you ever think about doing this? Or, hey, I joined you for that pitch and I saw the way you talked about that and that was really good, but over here I saw something else, and have you thought about presenting it in a different way? That kind of positive, encouraging, constructive conversation is the type of thing that I like to try to offer up to senior bankers and just help them. Again, I'm big on habits. Help them build habits and disciplines that they can rely on throughout their career. And then the last thing I would say, and this goes for senior bankers and more junior bankers, I find in a lot of instances that the most effective people in almost any profession or career are those that have a great sense of self-awareness. People who are really self-aware. They understand what they're really good at, what they're less good at, what some of their interpersonal weaknesses are, or the areas where their tension is liable to rise, or maybe their temper is going to be triggered. They're aware of all of that, and so they're able to manage themselves successfully in lots of different environmental contexts. You can't just say to someone, hey, I don't think you're not self-aware enough, but rather ask experiential questions like, that's interesting that you had that reaction. Have you noticed that you've had that reaction in other contexts, and have you thought about how you might manage it better? To get them thinking about, that is a thing I do, isn't it? And it's not a great thing, and so I need to be aware of it and manage through it and around it. But I really do find in lots of contexts that our most self-aware bankers are the ones who are most successful on the platform, because they know where all of their own pitfalls are, and they know also where their strengths are, and they're able to go there and get to their strength with some degree of regularity. It makes them really effective bankers.
That's great. Burning up the notes here, and obviously having that call plan, organizing yourself, looking at particular pieces of advice in meetings where you could potentially grow, and being really self-aware, and I guess reflection. I hear it from a lot of successful leaders that they spend time reflecting and trying to look back. And I guess that is self-awareness in a way, right? Really getting to the bottom of that and what's making you tick. So love that. Love those answers. And I just want to stick on the call plan a second, because you talked about making calls as one of the key commandments at the start, and you mentioned it again. It's something you do see. So any quick tips for what makes a great call plan?
I'm going to do a shout out here to senior banker in our tech group named Brendan Ryan, who's extremely successful and has a very disciplined call planning exercise. Brendan has I won't expose all of his state secrets, but he has a weekly regimen that he puts himself through. And as I understand it from him, every Sunday night he builds that call plan and maps it out in terms of the calls he's going to make, the cities he's going to visit, the objectives that he wants to achieve for that week, and he puts it in front of himself in a spreadsheet fashion at least weekly. And doing that weekly reminds him, oh, that objective right there from last week, I did not complete that. I need to roll that into my spreadsheet for this week and make sure I put that in the top cell up there so that I can get that done. And really, what that really reflects is a discipline. It's not just relying on your memory, oh, I need to do that this week, but it's actually having a cell in a spreadsheet that's dedicated to that objective and knowing that you got to tick that off this week. And then none of us has one objectives. We all probably have 15. And another part of that, of course, is, are all 15 valid? Should that number be 7, right? Should I be focused on the 7 top things instead of 15, the more fulsome list? And again, by going to that exercise on a weekly basis, that's where I think we get the greatest power out of it, because we're really thinking about it, we're conscious of it on a weekly basis, and it does create that relentlessness about making calls that we've talked about earlier.
I love that. Planning, getting yourself arranged, really thinking about the strategy and what you're trying to achieve. I'm a big believer in that as well. So yeah, that makes sense, and I'm sure Brendan will appreciate the shout out.
Maybe he'll say, no, Steve, don't give away all the secrets. But he's a great banker and he's very disciplined. If I might, Pete, digress slightly for a moment and say there's another kind of bucket here or phrase I might use for effectiveness in this regard, and that's the idea of leading yourself well. And the idea of leading yourself well is, again, back to this idea of having habits and disciplines that allow you to remain organized. Part of, I think, leading yourself well is staying in shape, having a daily regimen that allows you to collect your thoughts in the morning and prepare yourself for the day. And a lot of what I think are our most effective bankers out in the field have that context of a daily regimen where they're really leading themselves well. And if I go back to some of the questions you were asking me earlier about junior bankers, everybody at some point, I think, winds up developing kind of a regimen for themselves that by which they try to lead themselves. But a lot of the younger bankers don't do it until later in their careers. So they're more likely to jump up in the morning and start thinking about, oh my gosh, I've got to get all this stuff done today. Let me take a shower and hustle into the office so that I can get working away at my computer. Again, there's something to be said for that when the work is piling up around you. But there's value in collecting yourself, getting exercise. Some people call it getting centered or prayer or whatever it is that stabilizes you in the morning, sets you up for success in the day. There's a lot to this idea of leading yourself so that you're well prepared to meet the challenges of the day, because it's a challenging field and it's quite unpredictable. And every day, most senior bankers, frankly, this is probably true all the way up and down the totem pole, are encountering challenges that they didn't anticipate encountering that morning. So having that sense of, I don't know whether it's peace, but certainly stability and calm in the midst of the storm is incredibly important. I think that derives from this idea of a daily set of disciplines that prepares you for what you're going to see in the context of the day.
Yeah, I love that insight, Steve. And I think what springs to mind is put your oxygen mask on first. You hear that all the time. And it's like, get yourself fit, get yourself ready. If you want to lead others, then you need to be in a good spot. So that really jumps out at me. I'm a big fan of, I have a morning routine. I do my workout, a lot of breathing as well, and get myself set for the day, often before my two young children get up and cause havoc. So I understand that mentality. And again, it wasn't in my early working years that I got that routine. It came later. So if you can get ahead of the curve, I think it's a good thing. So definitely should be thinking about it sooner.
You're on it. And particularly the part about getting up early before your kids get up. I'm with you on that. That's how I got started with it too.
That's it. Two young boys. It's very loud once they're up. So I got to get in my quiet time early. I want to switch gears a little bit. Obviously, you are a COO, and that brings some unique insight that I haven't got from other guests this series. Just a few questions around that role. First of all, what are the biggest challenges that you see facing investment banking COOs today?
There are always plenty of challenges to pick from. In the moment we are today, the market is the biggest challenge, right? We've been dealing really since February of 22 when Russia marched into Ukraine. We've been dealing with geopolitical upset, and that then, of course, we had the run of inflation and Fed raising rates to try to get that under control. And that, of course, in our industry leads to difficulty financing transactions and some mixed views as to what enterprise values should be in light of the cost of capital and all of these other disruptions. So the market itself is always something that we're doing our best to stay on top of and navigate. But that's probably just kind of table stakes, really, in the investment banking industry. I'd say something that we spend a lot of time thinking about is how do we keep our bankers? The people are the most valuable asset of the investment bank. How do we keep them happy, productive, focused on doing business in the outside world rather than contending with their peers internally or worried about compliance issues or whatever? Not that compliance issues aren't important, because that's something else I oversee at the firm within GEIB, or have some responsibility for within GEIB, but really trying to provide an environment that bankers can flourish, try to remove problems from them as much as possible. We think a lot about that. How can we streamline this and make it easier for them? That's something that occupies a decent amount of my time. How do I make it easy for bankers to do business on our platform? That said, regulatory environment is a challenge. FINRA comes out with new regs all the time, and so we're continually juggling that, particularly juggling that relative to the thing I talked about a second ago, which is making sure bankers have the freedom to conduct business effectively on the platform. And then probably the last thing I just say is just generally the rate of change in the world, right? If you just think about the last 4 or 5 years, we went through COVID, which was incredibly disruptive, then the geopolitical stuff that I talked about, then the interest rate increases, then you've got ChatGPT and AI and all of that stuff coming down the road. So one thing I'd say about the COO role is that you never really have time to rest and focus all of your attention on a specific issue. It's much more likely that you're getting an issue today that you've never seen before, that you maybe heard was coming at you, but you didn't realize how fast ChatGPT was going to be an impact in the industry, something like that. So it's really the rate of change is something that just requires a great deal of just staying on your toes and anticipating what the next thing may be. So honestly, all of that makes the industry fun. Those aren't necessarily negatives. Those are the kinds of challenges that make the industry interesting and ever-changing and growing.
Yeah. Definitely that variety and talent management, hear about it a lot. Talent acquisition, keeping talent, regulations, markets. As you said, it's been a bumpy ride recently, and hopefully this year is going to bring a lot more than 2023 on that front. You touched on technology, so let's talk a little bit about that. Obviously, technology and automation are really transforming various aspects of investment banking. What's your take? How do you see technology impacting the roles and responsibilities of analysts, associates, and VP?
Yeah, it's a question that I'll be honest with you and tell you that I think I'm probably not terribly well suited to be the guy answering in a lot of ways, right? Because I come out of a different era. I can jokingly tell you about the age of fax machines before email. So what we've done around that, just to solve that a little bit or to address it, is we've created our own, we call it the experience team, which is led by a former banker, very creative professional named Leslie Ann Curry, who's got a lot of skills in the technology arena. And Leslie Ann has built out a team of roughly 10 professionals who stay on top of all sorts of different trends, technology and otherwise, that are going on in the industry. And we are pretty frequently running pilot projects with the experience team to think about. A recent one is the obvious. Let's get on top of AI and chat GPT and figure out what's going to be the impact of this on banking, both in positive and negative ways. From a positive perspective, our real estate team has done a lot of really interesting work looking at AI and how it can be used to run routine processes that analysts used to have to run themselves. How can we let machines do that so that we can take the same analysts? We're not looking to get rid of analysts, but rather give them higher order of magnitude types of opportunities to work on rather than doing the routine stuff. And then we're looking at it as well from how does this impact valuation models? How should we think about running valuation models in a generative AI kind of a world? It's ever present out there. Just AI, for example, is becoming much more of a desktop tool today than it's ever been before. And in a lot of ways, I guess I'll say I've farmed it out to Leslie Ann and the experience team to help us stay on the edge there and make sure we know how we're approaching those kinds of issues and how we can leverage them to our advantage as they make their way into the marketplace, which they do quickly these days.
Such an interesting area, and I think we're not quite got our arms around all the different efficiency gains, and that's part of the challenge of the new technology coming through and how we're going to adapt to it. But it's certainly a really interesting area, and the team you mentioned focusing on it sounds like a great way to harness some of that. So exciting. And again, I know as a COO, I'm sure this is somewhere on the board and the agenda. As the industry becomes more focused on diversity and inclusion, what steps do you see that investment banks can take to foster a more inclusive environment?
For sure, Pete. This has been a focal point of investment banks, certainly over at least the last 3 years, probably the last 5 years, maybe the last 10 years, but with increasing levels of intensity around how to make it work. And I think part of the reason why it didn't work as well as we would have all hoped in the first iteration of it was that I think, and I'm not necessarily talking about Raymond James here, I'm talking about the industry generally, is that we collectively thought that by having good intentions, we'd get to good outcomes. And I don't think the good intentions were enough, because when you got down to doing the recruiting, people are just reliant on their existing networks. So if you had let's just say a white male-dominated workforce, and you were asking that workforce to go recruit, they would typically, it's human nature. It's not ill will, it's just human nature, recruit in their image. And so you would wind up with more white males, and it became an ever-reinforcing problem. So to me, the answer that we've come to is to be a good bit more rigorous about measuring how it is to account for diversity and building it into our processes. And then in addition, promoting it. I'm here in New York today for a diversity recruiting event. I attended another diversity event in St. Petersburg at our headquarters, where we have our Women in Capital Markets conference about 2 weeks ago. Done to try to address the situation is really ramp up the intensity and the promotion around the types of things that we do that really are designed to cast a wider net and bring different kinds of candidates in, women, people of color. Cast the net that will do a better job of getting us access to those kinds of candidates, and then be a good bit more rigorous about our recruitment and hiring processes so that we're really building in some metrics that help us understand what it is exactly we're doing. So it's really, I'd say we've replaced good intentions with real intentionality and measurement, and believe that's had an effect. And I think that's part of the key of what we have to do across the industry to really change the dynamic there. At a certain point, we'll get to a tipping point and it'll work on its own, maybe at some point in the future, but we're not there today, I don't believe, as an industry. Not just talking about RJ, talking about the industry as a whole.
No, I think that's a fair reflection. And again, thanks for the insight. It's nice to know how you tackle it. I think that's good examples as well. And I'm sure it will have an impact. And we talked about leadership, and you don't need a leadership title to be a leader. I think that's what you look for in your team, right? To organically build leaders. And diversity and inclusion, like many topics, it's not just a leader challenge. So what advice would you give individuals at all levels to contribute to creating a more diverse and inclusive culture?
I think, frankly, the younger generation of bankers that we've brought on over the last 3 or 4 years, having grown up in a world where diversity and equity and inclusion were a much greater part of the vocabulary and the practice than what, for example, I grew up in, or even several generations after me. I feel like we're in a much better place these days where incoming bankers have a sort of expectation that there's going to be an element of diversity around them, that the firm is going to cultivate that the firm's going to seek it out, and that to the extent those diverse people give us diverse views or different perspectives, which is what we really want, that all of that has to be respected and incorporated into the way we do business. And the good news is, again, is that I think the generations of young bankers that come into the workforce today don't really have to be trained on that. They already think that way. And our job becomes just to reinforce it, again, through our hiring practices, our promotion practices. We talk a lot about respect as a mantra within RJ, where everybody's views need to be respected and taken account for. Respect is an acronym that we use around the place for a series of behaviors, and we have those behaviors as a certain base level of expectation posted on signs throughout a number of the offices. And so when you reinforce the messaging that way and you have this baseline expectation of diversity, equity, and inclusion built into the mindset, you've got a much better shot at being effective in it than we had maybe 10 years ago. So I'm hoping that all of this together creates a bit of a snowball effect where it really starts to go in the right direction over time. And I think we're getting there.
I agree. Thanks for sharing some great insight there. I think you touched on talent, keeping talent happy, and that being a key challenge. And I can see throughout today's episode, there's been lots of great things and initiatives put in place at RJ to help growth and development and engage the team. I want to touch on recognition. Outram's a recognition company, we're recognition experts. So do you want to know some of the things you've maybe seen over your career that have worked, or things that we could do to better build a culture of recognition within investment banking?
Yeah, and on this one, I'll give my boss, colleague, and friend Jim Bunn a lot of credit because he builds recognition into a lot of different things that we do. For example, Jim has a weekly email, which is called This Week in Investment Banking. And This Week in Investment Banking is a recitation of all of the deals that got closed this week, all of the great research that got released by our research analysts, and other great things that just happened to occur within our GEIB business over the last week. And those are specific shout outs of we closed such and such a deal for $500 million and the fee was $6.2 million and it was led by these 4 or 5 people and fantastic outcome for the client, that sort of thing. We do on a weekly basis. And that's really a weekly leaderboard. Jim's a golfer. He thinks a lot about the leaderboard. So these are people making the leaderboard on a weekly basis. We also compile those leaderboards quarterly and annually. We have quarterly session where Jim goes over the results that GEIB has experienced and talks about the business as a whole, the trends in the business, and then again, top 20 deals in M&A that got done and the banking teams that did it, and the top 20 deals in ECM that got done, the banking teams that did it. And we honor those teams on a quarterly basis and then on an annual basis. So tracking this and pretty consistently talking our bankers up internally among each other. Jim and I spend a lot of time talking to senior bankers. And one of the things we're often doing is saying, hey, the real estate team encountered an issue similar to that a couple of weeks ago. They had some great ideas for dealing with it. You should go talk to Jamie and Brad, who run the real estate team, and get their perspectives on that. So we're trying to get bankers talking to each other and recognizing that there are solid best practices that exist throughout the firm. In that respect, Jim and I are operating as traffic cops, helping people to identify who's doing something great somewhere else in the firm that they can really leverage. We talk a lot about collaboration between our European investment bankers and our U.S. investment bankers. We've built a fantastic European franchise. It's grown very quickly. Got some tremendous bankers in London, Munich, and Frankfurt. And we like to tout their successes as well. They're part of the leaderboard as well. We do it on Monday morning calls. So there's all sorts of messaging opportunities that we have, but a lot of it is built around the idea of a leaderboard, and hitting that leaderboard with a big transaction every week is exciting for a banker. Every once in a while, I still manage to get on a deal team and have my name tossed up on the leaderboard, and it's fun. You get a bunch of emails after the fact that say in effect, hey, old guy, I didn't know you were still practicing investment banking. Great to see you on the leaderboard, that sort of thing. It's rewarding, and it makes people feel good about what they're doing here at RJ.
I love the initiative. What a great way to celebrate the wins, which is key, right? Celebrate the wins and celebrate them in a timely fashion. So I love the approach there. Something resonated with me that you said, it's not always the leaders that's expected to know everything, but if you know the right person, and that's exactly what you explained to me, how you connect people with the right people to deal with the challenges. It's not about knowing it all yourself, but being well connected to provide the right person, the right resource. So love that. Definitely something to take away for me, if not the audience. Believe it or not, we're coming towards the end of the episode. I want to get you to look back on your career. I guess that's what we've been doing, but a couple of more pointed questions in that area. If you went back to your first day in investment banking, knowing what you know now, what piece of advice would you have given yourself?
Yeah, I'll adjust your question a little bit. Since I became an investment banker kind of midstream in my career, I'm actually going to move it back even further to when I started my law career in the Stone Age of 1985, okay? And I think the piece of advice, the single most important piece of advice that I would give myself then, because I was a very stressed out young associate in a law firm environment, and my engine ran really high and I could get stressed about anything, is to say, look, this is a long game. The things that you are stressed about on day 1 or day 3 or day 5 or even day 370 are not things that frankly you're going to even remember that you were stressed about them, even in a year, right? And my encouragement to that young self or to young bankers listening here would be to not to be disregarding of the problems in front of them, right? We're expected to solve those problems, but to realize that the problems we're solving are the problems of the moment and that there's a much longer track in front of you. And what you really want to do for the long haul is develop that skill set so that you become competent not in solving this problem, or it's good to know how to solve that problem, but the better competence is to know how to assess and deal with problems generally, and how to get the right kind of help, how to know when you know that you don't know so that you can go get help. It's building the tool set that makes you much more skilled and well-rounded. And then again, just the intellectual wherewithal to realize that life is this big, grand thing that's got a lot more to it than just investment banking, and trying to keep everything in meaningful perspective. Because again, when I was that young law firm associate, every problem hung over my head and stressed me out and made me anxious. And I think I spent needless time being anxious about issues that, again, today I can't even remember what they are. And it was time wasted because I was not building a broader skill set in those moments. I learned a lot of what I've communicated to you today in the back half of my career, and I sure could have used it much earlier in my career. I just didn't have the tools to bring to the table.
Love that. And again, quite often when I get senior successful investment bankers to reflect back, less stress, less worry is often top of the list. So hopefully everyone listening today can, probably in the throes of some stressful moments, take something from that.
If you're a junior banker, and I realize this will be not all on video for everybody, but if you find yourself myopically focused, you got the blinders on and you're intensively looking at just this single problem, you have to coach yourself, hey, I got to remove the blinders and think about this more holistically. I'm way too nano-focused on the issue of the moment. That's just going to lead you to disregard other issues that are probably also important to the analysis.
For sure. And I'm a big believer that leaders are readers, and it doesn't necessarily have to be books these days, podcasts, materials. Is there anything that you can recommend that's had a big impact on you and your development over the years?
I read a lot. I listen to a lot of podcasts. I hesitate to be selective about which ones I like. I think it's important for everybody. I read a lot about non-financial topics. I read a lot about sports and leadership or faith and leadership. I think I mentioned to you in a prior conversation, my morning centering exercise, I've been reading a slice of the Bible almost every day for about 25 years, just because that happens to be something that matters to me. And that kind of ancient wisdom becomes more useful and more relevant to me with every day. So just, again, having routines and disciplines and access to materials, as we're talking about now, that take you out of the realm of finance and give you or encourage you to think about some of the other aspects of the world, whether it's sports, faith, leadership, politics, whatever it may be, so you get a more holistic vision and you're not just hyper-focused on models and spreadsheets and deals and that sort of thing. I just think it makes for much better career, much better person, much more well-rounded at the end of the day, and that makes you more effective ultimately. But I do encourage that steady reading stream. I often ask young people that I spend time with, what are you reading these days? And if they blank out on you, it's an opportunity to have this conversation about what else is out there that they could be either reading or listening to on a podcast. So many great podcasts out there these days. Just depends upon what slice of life you want to dive into.
Yeah, for sure. And I shout out to my old CEO, Stephen Sokola. He got me into reading early in my career at Outram. And since then, I never looked back, just opening my mind, taking an opportunity to learn something new and grow. It was amazing. Steve, last question, I promise. Mentioned it at the top of the session. We haven't come back to it. So I know you volunteer as a community high school basketball coach. I'm sure you're plenty busy. Why did you add this to your calendar? And how does it help you in your leadership journey or your journey as an investment banker?
Awesome. Thank you for asking that question. Everybody who knows me knows I'm a basketball junkie. That's kind of part of who I am. I've been playing hoop for over 60 years and coaching it and reffing it and watching it, and I'm just a junkie. Now, my wife has also asked, why did you do this? Because it is analogous to having a second job. I often close up the computer at 4 in the afternoon, get dressed in sweatpants and run out to basketball practice, coach a bunch of kids, come back at 6:30 or 7 and get back on email and start being an investment banker again. But it's been a great deal of fun. And what I get out of it is just the whole concept of leadership from a completely different environment and perspective. In that environment, I'm an assistant coach. I'm not the head coach. So I work for a young coach named Greg Blythe, who's a fantastic basketball coach. And he and I have a lot of interesting conversations about how you motivate teenagers as opposed to bankers. Very different kind of thing. I love building relationships with young people, teenagers, and challenging them with some of the concepts that we've talked about here. Probably the other thing that's really been very valuable to me in that context is in high school basketball coaching, since this is my first year doing it at that level, I'm really a novice. I am the guy that they say, hey, Steve, can you go fill the water bottles up? I am that guy. My job becomes to go get the water bottles filled up before the varsity game.
Nice.
And, it's so much of leadership is about having learned to be a good follower first. And I'm so out of context now that I have to learn to follow all over again. And it's been a lot of fun. I've built a lot of camaraderie with the guys on the team. I've certainly built a lot of camaraderie with my fellow coaches. I'm part of a coaching staff, and there's a bond there associated with that. And I've learned a lot about motivating young kids in a sports context, Coach Greg. And overall, it's just been a very kind of diversifying experience. I'd like to be able to keep doing it in the future, but it takes a lot of time. So I don't know that I'm going to be able to continue to juggle it, but it's been a lot of fun for the season that we've had right now. We're still in the middle of the season. We're still getting better, and we still have high hopes for how this will come out by the end of the year. We're a work in progress.
Nice. Hey, again, the humility that you talked about before comes through, and putting yourself in that position to challenge yourself and learn again is great. And I wish you and the team the best of luck for the second half of the season. Finish strong.
Thank you.
You might find that I'm reaching out in a few years for some advice on motivating teenagers when my two were a little bit older. See what you've learned and share with me to help.
Yeah, that's a whole field in and of itself. I agree with that.
Steve, we are at the end now, so thank you so much for your time, especially given how busy you are. I've burnt up a few pages on a pad here, so I'm sure there's a ton of insight and takeaways for our listeners, and that's what this is all about. Really enjoyed speaking to you, and thanks for the time. Appreciate it.
Hey, my pleasure. Thank you, Pete. Take care.
This episode was brought to you by Outram, the global leaders in the financial deal gift, awards, and recognition space. So if you need any assistance in these areas, don't be afraid to hit me or the team up. I really hope you enjoyed today's episode. Thanks for joining us, and until next time, best of luck on your growth journey.